Good evening. Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday, December 7th, 2023, just getting on to 6 p.m. Central Time. Well, what an interesting time. Another update in the markets, but I haven't changed my opinion. You know, I told you at the end of last week, I thought that when we go into the first part of December, we were going to need to consolidate, and that's the word I'm still using, whether or not these stock indices, what they're going to do, and I think that is what you're getting. Tomorrow will either prove that, hey, this was a launch pad and we're going right on through the roof, or we're going to do more of this consolidation because you get the all-important jobs data. Now, you got to remember, some 41,000 plus workers were out from the Screen Actors Guild along with the United Auto Workers. They've come back. So when you get a number tomorrow, you got to take into your mind that includes it. So that's why the number's 180,000. Whisper numbers are a lot lower, including that of 156,000. I don't know what it is, but you will see the analysts will say, that includes that, and here's where we're at, and what are we going to do with that, and where are we, and so on and so forth. Your bonds and notes have rallied, as we know, dramatically this whole first part of the, in fact, for the past couple of weeks. And we have taken suddenly interest rates down where maybe the 10-year note's going to crack 4%. Isn't that hard to believe? It could certainly do it tomorrow if you got what's called a friendly number tomorrow, where the Fed would say, hey, look at how terrible things are. Even with those people coming back to work, you really put on 100,000 jobs. I'm just making this up, but that would get the traders going, that puts the Fed, they got to go. Here's what's going to happen. The dollar down today because, again, before 7:30 in the morning rolls around, we get that report. A lot of traders tonight coming out, different time zones. They're not up in the middle of the night. They don't want to worry about it early in the morning. So you can see that type of trade goes on. You're still stuck in very much sideways action, as I see it, in the metal markets. I think tomorrow is such an important day. I think it's like it's almost got like a real live Fed meeting where you're not quite certain what they're going to do. I just think you got to give it more importance than you normally do. Normally I look at it, that yes, no, here's what it does. This baby's a little bit different this time. Pay attention to it and be careful. You're trying to hold the 74 to 69 level on the energies. They finished lower, but late in the day they had a rally, so the market's catching up with what that did. But even when you took out today nearly 120,000 billion cubic feet in natural gas, it had no impact. And by the way, that's about 3 times the norm that you do on this date. And what the market's saying is we have so much. We're at a record amount going into winter. Now, when's winter? You know, I keep saying here we are in winter. December, I think it's 21st, is the first official day, the calendar day, if you will, of winter. So we're still another couple of weeks away from that. Okay, we'll get through that and so on. When we're in winter, guess what I start looking forward to? You have an idea? Spring. As soon as it's winter, as soon as I'm in January, I know it sounds crazy, mentally, I'm already thinking of April and the better weather. It's crazy how it goes. So right now I'm in my winter mode. All right, in the gold market, we're down for the week, almost 2%. Okay, but it had a heck of a run-up recently. If we step back from here and we see the week before it was up 3.39%. So if you subtract what we just lost, you were still up nicely overall. That's one way to look at it. The market, after that monster break from the 2150 area, is consolidating. It's trying to figure out what to do. Now, the chart action, higher high, lower low, no real setup to work from there as I see it. Even if you take out that low, you're going to have big time support at 2031.5 down to the 200-day average of 2006. So I see a support under the market. I don't see, though, a reason to be jumping in and saying, you got to buy it again. The market's going to run just yet. The resistance still pretty strong here at the upper Bollinger Band. So when I look at that market at 2087, I just say, That's your resistance point. The support's 2031. I don't see a trend. I see a higher high and a lower low. And momentum, which had been getting itself overbought, is fully worked out of that. It is a difficult market right here. It's certainly going to look at the jobs data and come to life with it. In the gold-silver ratio, I got the colors right, by the way. I color this gold when you're climbing like that because you need more ounces of silver, 86, 88, 90, to get an ounce of gold. So that means gold is the market that's in play, not the silver. And when I look over at the silver, I've told you for 3 days that I've been telling clients I think that this is where they should accumulate. And then you don't want to see that level and this level. Depends your risk tolerance. But those are the numbers that should not be taken out. So if you're buying silver for the very long term, I use the word very long term, this is where I think traders are starting to come in. Am I telling my traders to do it as a formal trade? I can promise you I'm not. But that's like me telling traders when we went to the Bollinger Band bottom in the video, where I always say when you go to the bottom, the pros take off shorts. I said, you watch. You're going to see buying come in there because the game's change in certain markets, not the technical analysis. Got to understand the psychology. People want to own NVIDIA because to them it's the next $1,000 stock. And at 455, it is cheap to them. How do I get involved? I want to buy a big break, so you get a $60, $80, $100 break. They're buying it, they're going to hold it. And then every time on TV, they see in the financial news, whatever, NVIDIA, the leader, can't fulfill orders. They get crazed and go. Well, silver's no NVIDIA. Let's understand that. But it is something that is going to be important. And if you believe, as I do, that we have ended interest rate hikes, it's a question of when the process of cutting rates begins. Then you want to own markets that will be rate sensitive, which will be the metal markets. On that, I would think that the dollar would break in time. Now, you have to understand the dollar. And, I'm going to save that. I'll do that when we get to the financial update right after this one. I don't want to talk about that yet. So you're oversold into a support zone. And believe it or not, the trend is still up. Higher lows, higher highs. I don't like buying under the 18-day average is what keeps me away from that right now. In the copper market, I just don't see a trend. I see a higher high, lower low. Now, in my full research tonight, I'm showing traders both the Shanghai and the Hang Seng indices. They have fallen dramatically in China. They are down to a bastion of last support. If this doesn't hold, there's real problems. And so far, nobody's buying into the idea that, like me, it's all words that China's giving on the property market, no action. However, most people don't read like I do. There are two key government meetings, what they call their big events that happen, is all the big wigs come in twice now, and they set policy for the markets, financial policy. So this is a rough month, and we'll hear more as to what they do. Once we know what that policy is, I'll feel more secure in what I want to do with the market, because then we've set it for what it's going to be in the future, and then we start attacking the market a different way. In the platinum, still in the bear camp, resistance is going to be the combination of the 100-day average at 921 to 920.80. Trend is down since you have lower highs, lower lows. Bias is down, but you're heavily oversold. You get readings that are under 30. I want no part of them. Coming into today, you had a reading of 31. Tonight, you're down a fraction. You're at 30.7. So let's assume that you wanted to go short here. Let's just say that were the case. If the market goes your way at all, you're going to be under 30 and you're into oversold condition. Bye-bye. I don't see anything exciting there. In the dollar, do you believe that the 100-day average is acting as a key barometer here? You fell to it, you found support right through here. When you finally got through it, it became resistance, then you fell. You finally rallied back to the resistance point there and you fell. What is the dollar saying? It's saying it doesn't know what to do right here. The big washout occurred. You had what we'll call a bear market rally that stopped in the neighborhood where I think it should, the 18-day average, and now it's trying to figure out what to do, guess what? It's going to look at that jobs report and give us a pretty strong picture. Now, you might see that report and see a reaction go one way. Be careful. These type of reports they go one way and then you whip back the other on you, because what the trade does, they go, I don't believe it doesn't matter anyways, blah, blah, blah. So be careful. We will be covering that in great detail, all right? I'll be covering it with you in the morning tomorrow, because I'll have my update out at about 8:10 in the morning when I do this, and the report will have already been there, so I'll give you what I see on it at that point. You can always get our research that covers all this. And then you're getting the emails as they come out and snap decisions from our research team at Linn. How do you do this? You go to iraepstein.com, go to free offers, sign up for the research there. You can move your cursor up here and it'll take you there as well. I'm Ira. See you in the morning. No point in talking any further. Let's see the report and what we think of it. Talk to you tomorrow.